can you invest in individual stocks in a Roth IRA? Learn the facts about an IRA rollover and avoid some common mistakes. There are subtle differences between a rollover IRA and an account that has been funded using a transfer, but the terms are sometimes used interchangeably. If you become confused by the details and make a mistake, the account could lose its tax-free or tax-deferred status. Let me try to help you avoid that. With an IRA rollover, you might think of yourself as the middleman, since a check is made out to you and you must find a new custodian within 60 days. Otherwise, you will pay taxes on the fund. In some cases, your current custodian may be required to withhold at least 20% of the fund for tax purposes. But if you make a transfer instead of a rollover IRA transaction, you are not the middleman and you don't have to worry about taxes. If you are about to make an IRA rollover, it's time to compare custodial companies. They charge different fees and offer different investment options. Sometimes the fees that they charge can inhibit your ability to grow the account to its full potential. Limiting your investment options also limits your ability to grow the account. So when you are thinking about a rollover IRA, you need to do a little shopping. Compare the fees the companies charge as well as the investment choices that they offer. Under the current tax laws, you are allowed to invest in public and private stocks, residential and commercial real estate bonds, treasury notes, and bank certificates of deposit, as well as lesser-known vehicles such as tax liens, judgments, lottery winnings, and mortgage notes. Most custodians do not offer all of these options for a rollover IRA. The majority of the accounts are invested in mutual funds created by the custodial company. An IRA rollover is safer and can earn more when it is fully diversified. Many people think of diversification as investing in different areas of the stock market. But complete diversification includes all of the market's real estate, stocks, and money. There are numbers that you need to consider when deciding which markets to invest in and how heavily. Bonds, treasury notes, and CDs are considered risk-free investments because they are guaranteed by the federal government, but a rollover IRA will earn a maximum of 4% on these investments. The inflation rate is expected to exceed 5% per year over the next 20 years. You need to consider that because it means that your money will have less buying power in 20 years. If your expenses remain the same and you hope to retire in 20 years, you will need twice the money to cover the same expenses. If your expenses are higher, then of course you will need more. Stock market returns rarely exceed 8%, but returns in the real estate market are unlimited. If you make the right choices today, an IRA rollover can secure your future and your ability to retire in style. Good luck. If you are interested in investing in real estate in your IRA but would like a simpler, more turnkey solution, click on the URL at the foot of this article. This will take you to my website. You will find much more enlightening information there.